Hello students, welcome to my YouTube channel Sun Academy. Today in this question we are going to solve a question of intrinsic value of shares in financial accounts for SYBCom. As you can see, the question on your screen is that ascertain the intrinsic value of shares of B Limited. On the liability side, it shows 1 lakh 5% preference shares of 100 each, 2 lakh 50,000 equity shares of 100 each, reserves 8% debentures and current liabilities of 50 lakh. On asset side, land building 2 crore, plant 60 lakh, furniture 10 lakh. Under investment 5% debentures of 30 lakh, shares of A Limited 30 lakh, and debtors of 90 lakh, stock 60 lakh, cash 5 lakh and bills of 15 lakh. Then after it has been said that goodwill of the company is 2 times its super profit. Profit after tax 50% is 40 lakh and expected rate of return is 10%. Now here students, first we have to find the value of goodwill. For that, first of all we will have to find capital employed. Capital employed means asset minus liability minus preference share capital if there is, and here it is. So it will give us a capital employed, and from that we will find expected profit. Profit is given, difference of profit and expected profit will give us a super profit, and that is to be multiplied by twice, which will give us a value of goodwill. Then after we will find the intrinsic value of shares. First, now assets, net assets, or now under assets, plant land building is of 2 crore. Plant 60 lakh. Furniture 10 lakh. Under investment, now here when we calculate goodwill, non-trading investment is never taken, so 5% debentures will be kept aside. Only shares of A, and that is 30 lakh. Debtors 90 lakh. Cash 5 lakh. And bills payable, receivables 15 lakh. This will be total assets, and that will be 2 crore plus 60 lakh plus furniture is of 10 lakh only, plus 30 plus 90 plus 20, that is 4 crore 10 lakh. Plant 60 lakh, building 2 crore, furniture 10 lakh, share 30, debtors 90, stock is left out. Stock is of 60 lakh. So 2 crore plus 70 lakh, 1 crore more, 3 crore 90 lakh, 20 and 60, 80 lakh others. That is 4 crore 70 lakh total assets. Now from this we have to subtract liabilities. Which include 8% debentures and those are of 60 lakh, and current liabilities 50 lakh. That means total of 1 crore 10 lakh. This will be net assets. So 3 crore 60 lakh. Now less preference share capital, that is 1 crore. So 2 crore 60 lakh will be capital employed. Now expected profit is equal to capital employed into rate of return. Capital employed is 2 crore 60 lakh and rate of return is 10%. So average profit will be 26 lakh. Sorry, expected profit. Now we come to average profit, that is given 40 lakh. From that debenture interest will be subtracted. Debentures are of 60 lakh at 8%, 60 lakh 8% and 50% of that, because tax will be subtracted, that is 2,40,000. And preference dividend, and that will be 1 crore into 5%, 5 lakh. So 40 lakh minus 7 lakh 40,000, 32 lakh 60,000 is average profit. Super profit is equal to average profit minus expected profit. So 32 lakh 60,000 minus 26 lakh, so 6 lakh 60,000 is super profit. Now goodwill is equal to super profit into number of years of purchase. So 6,60,000 into 2 times, so 13 lakh 20,000 will be the value of goodwill. Now to find the intrinsic value, assets assets were total of or capital employed. Let's make it capital employed, that was 26 lakh. Sorry, 2 crore 60 lakh plus goodwill, that is 13 lakh 20,000. Now to calculate the intrinsic value, we have to take also or include investment which was in the form of debentures 30 lakh. So 2 crore 60 lakh plus 43 lakh 20,000, that is 3 crore 3 lakh 20,000. Now intrinsic value of shares is equal to total assets divided by number of equity shares. So 3 crore 3 lakh 20,000 and equity shares are 2 lakh 50,000. So 121.28 will be the intrinsic value of equity share. Now if we repeat, we have to calculate first the value of goodwill. For that we need to find capital employed, and for that first we have to take total of asset. We have to calculate total of asset, and that is land building of 2 crore, plant 60 lakh, furniture 10 lakh, shares in A Limited. Here there were two investment in the form of debenture and in the form of equity share, but debenture will not be included because they are non-trading investment. So only shares of A Limited which are trading investment. Then after debtors, cash and bill receivable, stock, which by mistake I had left out. So total assets 4 crore 70 lakh. From that liabilities in form of debentures and current liabilities will be subtracted, total 1 crore 10 lakh. That gave us net assets. From that preference share capital will be subtracted, which will give us capital employed. And if we multiplied capital employed with expected rate of return, that will give us expected profit. Now we will come to average profit. Profit is 40 lakh. From that we have to subtract debenture interest because we haven't included debenture in assets. So its interest will also be subtracted on 60 lakh, 8%, 50% because 50% is income tax. Then after preference dividend on 1 crore 5 lakh, 5%, 5 lakh. So total net profit remained 32 lakh 60,000. Now super profit is average profit minus expected, which gives us 6 lakh 60,000, and goodwill is twice of that, and that is 13 lakh 20,000. Now to calculate intrinsic value, first we need capital employed, which was 2 crore 60 lakh. goodwill 13,20,000 and non-trading investment in the form of 30 lakh. So that remained 3 crore 3,20,000, which we divided with number of equity shares, and resultant answer is intrinsic or book value of equity share. Now, next lecture we will attempt a little bigger sum than that of this. So, if you want to learn, do continuously watch my videos. Do subscribe and share the link of my channel.